Hi, hello, namaskara. Welcome back, viewers, to another episode of my channel. In today's video, we are going to break down on the five biggest triggers in the 2026 AI-driven audit system and exactly how you can avoid a notice from Income Tax Department. Let's ensure your refund stays in your bank account, not in tax demand. Let's dive into the details. Pause before you file your taxes this year. The income tax department's new AI system is already watching your data. If you are a salaried professional claiming HRA or switching jobs mid-year, you might be triggering a red flag without even knowing it. The information provided in this video is purely for educational and informational purposes only and does not constitute any professional, financial, tax, or legal advice. Income tax laws, including the draft rules for 2026, are subject to change. Tax impact varies based on individual facts and circumstances. Viewers are advised to consult with your chartered accountant or qualified tax professional before making any financial decisions or filing your returns. The creator is not responsible for any actions taken based on this content. In today's video, we are breaking down the five biggest triggers in the 2026 AI-driven audit system and exactly how you can avoid a notice. Right, the top five AI triggers for FI 25-26 are AIS mismatch, interest, dividends, or stocks not matching your ITR. HRA verification, claiming 50% Metro HRA without a matching landlord PAN declaration. High value spends, large credit card bills or cash deposits reported via SFT. And then fourth one is the job switch trap, double standard deductions or underreported previous salary. And the last one is the unverified deductions, large ATG donations or ATD claims without actual receipts. Due to the AI shift in 2026, Income Tax Department has moved from a random sampling to 100% data matching. The system now cross-references your ITR with Annual Information System (AIS), Taxpayer Information System, Taxpayer Information Summary (TIS) in real time along with 26AS. 26AS tells you what you have paid. AIS tells the department what you earned. TIS is the final summary that must match with your ITR exactly. If you want to know more in detail, 26AS, you think that as a tax passbook, it primarily shows how much tax has already been paid to the government on your behalf. If it is not in 26AS, you cannot claim the credit, right? That is the 26AS. Annual information system, it is like a master ledger. It is much more detailed than 26AS and also includes your spending, investment habits, inputs from SFT, savings interest, mutual fund, and this is what AI uses to find any hidden income you might have forgotten not to include in your ITR. Right, that is the AIS. And TIS, it is Taxpayer Information Summary. It is the simplified summary of the AIS. It duplicates multiple entries into single processed value that will be used to pre-fill your ITR. Right, so this is the final answer sheet for your tax return. So let's go through each of the red flags which was highlighted in previous slide and understand with some of the examples so that you can understand it better. This is the number one reason for notices. If your bank reports 50,000 in interest but you only declare 10,000, the system triggers an automatic mismatch alert. It might be because you have forgotten to add interest from the secondary bank account which you rarely use, or small dividends from shares. Even 500 are now reported by companies and must be disclosed in your ITR. So what is the solution? So before filing your return, download your AIS before filing and ensure every line item matches your ITR. Right, so 26AS primarily focus on tax credits, and who reports it as deductors, employers or banks. And is there any feedback option? No, you have to contact directly the deductor and get it corrected if there is any mistake. And what is the purpose? It is the final proof of tax paid into the government account, right? So that's the purpose. And AIS, it is primary focus is every financial transaction will get covered in this particular statement. And source, it can be from banks, brokers, or registrars. And is there any feedback option? Yes, it is there. If there are anything to be corrected, you can provide the feedback. And what is the purpose? It is to have the audit trail and keep all the financial transactions in one place. And TIS, it is primary focus is aggregated totals, and it is derived from AIS. And feedback option, it is indirect. Whatever correction you need to do, it has to be through AIS only and not in TIS. And what is the purpose of TIS? It's the pre-filling which you get if you are filing your return online. So that is where the data is taken from TIS and it is shown in your ITR. The red flag number two is on the HRA audit. Artificial intelligence now cross checks HRA claimed by you, and if your landlord is actually reporting that rent as income, that also gets verified because an employee in Bengaluru claims 40,000 monthly rent as the exemption, HRA exemption, and if the landlord's PAN is provided but the landlord doesn't show this rent in their ITR, then AI flags it as a bogus HRA claim. What is the solution? Ensure rent is paid via bank transfer, NEFT or UPI, and keep a valid rental agreement so that you have all the proof. If there is any question or notice from income tax department, you will be able to respond with the supportings. Right? If you want more details about HRA, including the income tax rules 2026 updates, please refer to my another video in the channel, and the link is also provided in the video description for your easy reference. The red flag number three is high value transactions which are reported via SFT. So what is SFT? SFT stands for Statement of Financial Transactions. It is a reporting mechanism used by the income tax department to track certain high value financial activities. It is a kind of a department's secret eye. It is a digital trail created by third parties like financial institutions, banks, stockbroker, or credit card company that tells the government how you are spending or investing your earnings, right? So that's the purpose of SFT. And then what are the kind of transactions which will be reported and what is the threshold? Cash deposits 10 lakhs or more in a year deposited into your savings account, your bank reports that. And 1 lakh or paid in cash or total spending of 10 lakhs in any mode, card issuer will report it to the department. And then if there are 10 lakh or more fixed deposits, your bank will report that. Mutual funds, it is 10 lakh or more for investments, your AMC or broker will report that. And if there are more 10 lakh or more foreign currency spendings either through travel card or forex, authorized dealer will report that information. And if you have purchased 30 lakhs or more valued property, either sale or purchase, then sub-registrar will pass on that information to the income tax department. Some of the examples: credit card bills. If you are paying the bills more than 1 lakh in cash for credit card bills, or total payments exceeding 10 lakh in a year, that will get reported. Cash deposit, as mentioned, cash deposits depositing more than 10 lakh in a savings account, that will be reported. And certain assumptions is if your salary is not matching to the deposits or the purchase or investment, that will trigger an uh, red flag and then notice as well. Like for example, if your salary is only 8 lakhs and if you have invested 15 lakhs in mutual fund, AI will ask where did the extra money come from. So as simple as that. Red flag number four, multiple form 16s. It happens because if you have switched jobs mid of the year, and which is a major trigger, because both employers will give you a standard deduction 50,000 and use lower tax slabs, leading to a massive under taxation overall. Suppose you join a new company in October, both company gives you a standard deduction of 50,000, and in your final ITR you can claim only one standard deduction of 50,000. So it is excessive deduction will trigger a red flag, and in turn the notice will be triggered. So what is the solution? It is always disclose previous salary to your new employer, or manually add both salaries in your ITR while filing the return. Red flag number 5, claiming deductions which is not in Form 16. That means you have not submitted proofs to your employer, but while filing the returns, you are claiming them separately, especially Section 80G donation or 80GG. The AA flags the sudden refund request. Some of the examples on fake political donations used to get refunds. That is a major trigger because it has been massive crackdown. And claiming medical insurance for parents who don't actually have a policy, right? So you don't have the supportings, and but you are claiming in while filing the return. So solution is only claim what you have actual receipts for, what you have paid for, and if a department asks you for this supportings, you must produce them within 15 days based on this sudden refund request trigger, and then if there is an email or notice which has been triggered. So we have tried to create a compliance checklist for salaried taxpayer for 2026. Some of the categories are documents, HRA claim, job switch, deductions, and filings. So what are the checklist for documents? It is download AIS, TIS, and Form 26AS that can be downloaded from your income tax portal, and you have to collect Form 16 Part A and B from your employer. And why it matters, the AIS, TIS, and Form 26AS, AI flags any mismatch between these and your ITR. It is essential to reconcile them and ensure you file the correct return of income. And then Form 16, it ensures a TDS on salary is correctly credited in 26AS. And always verify bank interest certificates, Form 16A, and because it is interest from all accounts, whether it is savings or FD, and that gets reported by the bank. In terms of the HRA claim, match landlord PAN and location, and keep rental agreement and bank proof, payment proofs that is required. Why it matters? Because EA cross verifies your 50% metro claim with landlord's ITR or entire rental income which is not disclosed by landlord's ITR. And then cash rent receipts are now a high risk, right? So always prefer digital payments, and digital trails are safer for you. And then job switch, reconcile multiple Form 16s, and report previous salary to current employer. Why it matters? A catches double standard deduction which you have claimed if you have switched jobs media, and then also prevents under calculation of tax slabs and surprise demands later. Right, and in terms of the deductions, check SFT limits of 10 lakhs, validate ETD, ATG proofs, have it handy. If there is any questions, you should be able to submit, because investment in stocks, mutual funds over 10 lakhs are reported automatically via SFT. So that is the trigger. And then sudden large claims not in Form 16 often triggers a e-verification. Filing, you must be knowing, confirm pre-validated bank account, e-verify within 30 days. Your if there is a refund with the pre-validated bank account, it gets directly processed there, and your ITR is invalid until e-verified via Aadhaar OTP. So we have come to the end of this episode. What are the action plan which you should take away from this episode? Always reconcile AIS and TIS with your Form 26 and ITR, and also use the nudge emails from the department as a warning to fix errors voluntarily. And then you have to watch out for tax nudge via SMS or emails, and then file early to avoid last minute errors. So that is the takeaway for you. And then I thank you for watching this episode. And if you're not subscribed to my channel, please subscribe to the channel and click on bell icon for notifications for any new videos which is uploaded. Thank you.